Gold drifted lower with the US Open on Friday, with the metal dropping to about $1,320 per ounce. It's been a rather eventful week in the gold market, with a lot happening despite a rather light data flow, with the metal opening with an up gap early in the week, climbing as high as $1,340 per ounce. Other bullish signs for the market is that the backwardation up until 3 months remains in gold, and the last time we've seen this was back in 1999. Then physical premiums are still rather high, with India experiencing premiums of up to $20 over the London spot. But of course there are specific reasons for India, with the market there hit hard by new rule changes which the government brought in on Monday, and thus caused the shortage of physical material. Then of course ETFs have seen outflows for most of the week, but even these have turned positive on Thursday, in what could be another bullish sign for the metal. We've also learned this week that most gold producers were still net de-hedgers even after the April falls, and many in the market had expected that there would have been some hedging taking place, but this appears to not have been the case. Then there's potential for strikes in major producers. South Africa is the 5th largest gold producer, and there's currently collective bargaining taking place between its gold producers and unions. Parties are very far apart, with the unions asking for increases of up to 60%, and the miners offering only about 5%. So there's big potential for a walkout there, with potential knock-on effects on the PGMs and so on. Now, looking ahead to next week, of course, it's non-farm payroll week, and this could have a big impact on the market, as it has a bearing on whether the Fed will be able to bring in its tapering on the quantitative easing program. So any large deviation from the forecast number will have a big impact. It's also expected that the unemployment rate will fall from 7.6 to 7.5%. So next week again could be a very interesting week for the gold market. This is Eddie van der Walt signing off from the floor of the LME.